You tell yourself you're an independent thinker, that your investment decisions come from cold hard data and personal conviction. Deep down in the wiring of your brain, the crowd's gravity is always tugging, making you buy when prices soar because everyone else is piling in, and sell when they crash because the exodus feels like the only safe path, turning what should be rational wealth building into a primal dance of conformity that costs you fortunes over a lifetime. This crowd effect isn't some modern market quirk. It's the same social programming that kept your ancestors alive in tribes, where deviating from the group meant isolation and death. But in trading, it flips the script to make you chase highs in euphoric bubbles and flee lows in panic dumps, buying the top and selling the bottom like clockwork. Society pretends investing is a solo game of numbers and news, but strip away the charts and you'll see the savannah herd in full motion, where one big buy signals safety in numbers, drawing you in with the fear of missing out, flooding your system with dopamine as the crowd cheers upward, convincing your brain that rising prices mean endless gains, even as valuations detach from reality. Your rational mind knows better, that bubbles burst and bottoms rebound, but the amygdala hijacks the show, mirroring the excitement or terror of the masses through social cues like trending tickers or media frenzy, overriding analysis with the ancient urge to belong, because loneliness in the wild was lethal, and in markets, going against the flow feels like standing alone against a stampede. You have bought into the illusion that your trades are immune, that experience or education shields you from the pull, but every bull run sees you adding positions at peaks because the crowd's momentum feels unstoppable, and every bear market has you cutting losses at troughs because the pain of holding while others flee becomes unbearable, compounding the cycle of regret that erodes not just capital but your confidence to ever break free. This isn't weakness, it's biology betraying you in a domain it wasn't designed for, where the crowd's whisper becomes a roar, luring you to buy high on greed's high and sell low on fear's low, leaving the smart money to scoop up your discarded assets. Write down your most obvious illusions about independence now. I trade based on facts alone. The crowd doesn't influence me. FOMO is for suckers. I won't panic, sell again. My strategy beats behavioral traps. Read them aloud and feel how hollow they ring when faced with the primal truth, how they mask the social wiring that has turned countless portfolios into graveyards of missed opportunities. Admit it, you are stuck in a pattern where the brain's crowd bias sabotages your gains, forcing buys at euphoria's peak and sells at despair's nadir, a self-inflicted wound that bleeds wealth with every cycle. Blind repetition of lone wolf myths in a herd-driven game is slow financial suicide, an active destruction of your future freedom. Some men will feel this exposure and confront it alone, journaling every trade influenced by sentiment, tracking crowd indicators like volume surges or social buzz to spot the pull early, building rules like mandatory cooling periods before acting in hot markets, emerging as detached operators who sell into strength and buy into weakness. Most won't, refreshing apps tomorrow and joining the next hype wave without question. For those who calculate the cumulative toll and see solo resistance crumbling under the next mania, because the wiring runs millennia deep, there are structured routes, narrow, proven systems forged by those who lost and reclaimed fortunes, with bias detection protocols, simulated crowd drills, neural rewiring exercises that force contrarian habits without the luxury of real money mistakes. I state only the gravity. Every minute yielding to the pull is another distorted trade. Every minute resisting is reclamation. The fire of autonomy still smolders. Fuel it against the crowd, or let the masses drag you under. Your brain craves belonging. Starve it. You tell yourself your trades are calculated moves based on charts and news. But when the market surges upward and the crowd piles in, your brain lights up with the same ancient wiring that made your ancestors join the hunt when the tribe moved as one, flooding you with dopamine to buy at peaks because belonging to the winning group feels like survival, even as valuations stretch to absurdity. This isn't logic. It's the social conformity circuit misfiring in a financial arena, where FOMO acts as the modern equivalent of spotting a bountiful plane, pulling you to chase the rally without questioning if it's a mirage, leading to purchases at all-time highs that crash when the herd reverses. Society calls it greed, but it's biology's reward for alignment, the same that kept groups cohesive against threats. But in investing, it turns opportunity into overpayment, as you buy high not from data, but from the contagious excitement that mirrors neurons amplify, making the crowd's euphoria your own irresistible urge. Your prefrontal cortex knows to wait for pullbacks, but the limbic system overrides with the fear of being left behind, because isolation meant death in the wild, and missing a bull run feels like starving while others feast, compelling you to join late and pay premium. Conversely, when When the drop hits and the sell-off accelerates, the same wiring flips to flight mode, urging you to sell low as the crowd flees. Because standing alone against the tide feels like facing predators solo, flooding cortisol to escape the pain. Even if fundamentals scream bargain, you think your stop losses or rules protect you, that you're not swayed by the masses, but the next dip will test that, as social proof pulls harder than any balance sheet, turning hold into fold under the weight of collective fear. Write down the illusions about your autonomy now. I buy on dips only. Greed doesn't cloud my judgment. I'm not affected by bull market hype. My sells are timed perfectly. The crowd's moves don't dictate mine. Read them aloud and feel how they ignore the primal tug, how they dismiss the evolutionary forces that have wired you to align with the group at all costs. Admit it, you are stuck in a neural loop where social wiring sabotages timing, forcing buys at highs on euphoric pull and sells at lows on fearful push, a cycle that bleeds capital with every swing. Blind repetition of rational trader myths in a socially wired brain is self-sabotage, an active erosion of your financial freedom. Some men will rewire alone by studying neurofinance, tracking dopamine triggers in journals during rallies, building barriers like mandatory contrarian reviews before buys in hot markets, emerging as independent operators who fade the crowd's extremes. Most won't, jumping into tomorrow's hype stock without pause. For those who trace the wiring and no solo overrides will fail when the next mania hits. Because the circuits are pre-rational, there are neural frameworks, narrow systems built from behavioral labs with biofeedback drills, simulated euphoria tests, instinct interrupt protocols that enforce detachment without live trade risks. I state only the circuits. Every day wired to the crowd is another mistimed trade. Every day rewiring is reclamation. The fire of discernment can cut the strings, ignite it, or let the puppet dance continue. Your neurons favor the group, recode them. You feel it building as the market climbs. That irresistible tug to jump in because everyone else is, your brain releasing dopamine hits from the social proof of rising prices, convincing you this time it's different, that the crowd's momentum guarantees endless gains, leading you to buy at peaks where valuations defy gravity, but biology demands alignment. This FOMO, fear of missing out, isn't just slang, but an evolutionary relic from tribal days when excluding yourself from the group's bounty meant starvation, now misapplied to bull markets where the herd's euphoria spreads through forums, news and tickers, mirroring neurons making their excitement yours, overriding caution to chase the high even as bubbles inflate to bursting point. Your rational self knows to sell into strength, but the limbic pull favors the safety of the pack, because solitude in evolution was death, and sitting out a rally feels like self-sabotage, compelling late entries that turn to losses when the turn comes. Conversely, when the drop accelerates, fear takes the wheel, the same wiring that fled shadows now selling at lows because the crowd's retreat signals mortal danger, flooding adrenaline to escape the pain of paper losses, treating drawdowns as deadly wounds rather than temporary setbacks. You assure yourself your risk management holds, that you're not prone to amateur mistakes, but the next correction will expose the lie, as collective despair pulls you to cut and run, joining the capitulation that bottoms the market for others to buy. Write down the illusions fueling this cycle. FOMO is rational in trends. Fear protects from bigger losses. I buy highs only on breakouts. My sells at lows are strategic. Biology doesn't trump training. Read them aloud and sense how they excuse the primal override, how they ignore the neurochemical cascade that has wired you to sync with the group's mood swings. Admit it. You are stuck in a biological trap where FOMO inflates buys and fear deflates sells. A double-edged sabotage that erodes edges over cycles. Blind repetition of disciplined investor myths in a biologically biased mind is voluntary underperformance, an active barrier to compounding. Some men will dissect this alone by biohacking the responses, using journals to log FOMO triggers during rallies or fear during drops, incorporating techniques like mindfulness to pause the dopamine rush or cortisol spike, emerging as balanced traders who fade the extremes. Most won't, feeling the pull tomorrow and acting on it unchecked. For those who map the chemistry, and no solo hacks will fade when the next wave crashes because the responses are pre-conscious, there are neurostrategies, narrow systems derived from psych labs with hormone monitoring drills, simulated FOMO tests, chemical interrupt protocols that stabilize without pharmacological crutches. I state only the chemicals. Every day doped by the crowd is another skewed position. Every day balanced is reclamation. The fire of equilibrium can steady the hand, stabilize it, or let the highs and lows consume your balance. Your system favors the surge. Regulate it. You spot a stock climbing and hear the buzz from forums, friends, or news that everyone's in, convincing your brain through social proof that it must be a winner, pulling you to buy at highs because the crowd's consensus feels like undeniable truth, even as the ascent defies fundamentals and sets up for the fall. This trap isn't new. It's the evolutionary shortcut where your ancestors trusted the group's judgment to avoid poison berries or spot safe paths, now hijacked in markets to make you follow the masses into overvalued assets as mirror neurons fire to align your excitement with theirs, overriding your own due diligence with the comfort of not being alone in the bet. Your logical side knows to question the hype, that popularity often signals peaks, but the social wiring favors validation from the pack because disagreement in tribes meant exile, and buying against the trend feels like social suicide, compelling you to join the frenzy late and overpay. Then, when the reversal hits and the sell-off gains steam, the same proof flips negative as the crowd's exit validates the fear, urging you to sell low to avoid being the last holdout, because standing firm while others flee echoes the terror of being abandoned on the plain, flooding you with anxiety that drowns out recovery potential. You reassure yourself your independent research trumps the noise, that you're not swayed by what others do, but the next bear signal will reveal the trap as collective retreat pulls you along, turning paper losses into realized ones at the worst moments. Write down the illusions about your proof immunity now. Social buzz is just noise I ignore. I don't buy because others are. Group consensus doesn't validate my sales. My edge comes from isolation. The crowd's moves are irrelevant to pros. Read them aloud and recognize how they underestimate the tribal pull, how they dismiss the conformity bias that has wired you to seek safety in numbers over solitary truth. Admit it, you are stuck in social proof's snare, where crowd validation inflates highs and deflates lows, a bias that skews timing and bleeds returns across portfolios. Blind repetition of solo genius myths in a proof-driven ecosystem is voluntary misalignment, an active dilution of your compounding power. Some men will escape alone by auditing influences, flagging social cues like trending hashtags or analyst herds in pre-trade checklists, cultivating contrary rituals like delaying actions until proof peaks fade, emerging as proof-resistant traders who fade the consensus. Most won't, echoing tomorrow's popular picks without scrutiny. For those who chart the bias and no solo filters will leak when the next viral trade hits, because the wiring embeds proof deeper than logic, there are proof-shielding constructs, narrow systems extracted from behavioral studies with consensus detection algorithms, simulated proof tests, isolation enforcement drills that fortify against the trap without repeated exposure risks. I state only the validation. Every day seeking crowd proof is another misaligned entry. Every day rejecting it is reclamation. The fire of skepticism can burn the ties. Kindle it, or let the group define your ruins. Your instincts favor agreement. Challenge them. You assure yourself that your investment calls are purely your own, born from research and gut feel honed by experience. But the crowd's subtle sway is always there, whispering through analyst reports or forum threads that align with the majority, nudging you to buy at highs when consensus builds and sell at lows when it crumbles, creating the illusion of independence while biology ensures you're never truly alone in your decisions. This trap of perceived autonomy ignores how social proof embeds in every trade, where the brain seeks validation from the group's direction to reduce the perceived risk of deviation, because in evolutionary terms, the outlier was often the outcast, now manifesting as FOMO driving peak purchases or fear prompting bottom sales, even as you swear it's your analysis alone. Your strategies might include technical indicators or fundamental screens, believing they filter out the noise, but when the market's tide turns, the same illusion lets crowd sentiment seep in, turning hold into sell as the pain of bucking the trend feels too isolating, echoing the ancestral dread of tribal exile. Every bubble and bust reinforces this, from cryptomanias where everyone's getting rich pulls you in late to bear markets where everyone's getting out pushes you to capitulate, all under the guise of personal choice when it's really the herd's hand guiding yours. You maintain the facade that training or tools make you immune, that you're not like the retail chasers, but the next swing will unmask it as collective moves influence your timing more than admit it, leading to the classic buy high sell low regret. Write down the illusions of your solitude now. My trades are crowd-proof. Experience erases bias. I don't follow sentiment. Independence is my edge. The masses don't dictate prose. Read them aloud and confront how they veil the interconnected reality, how they overlook the conformity drive that wires you to echo the group subtly. Admit it. You are stuck in the delusion of independence that masks crowd influence, skewing buys to highs and sells to lows, a hidden saboteur of returns. Blind repetition of isolated genius claims in a socially entangled field is voluntary blindness, an active limiter on your growth. Some men will shatter this alone by cross-referencing trades with sentiment data, questioning every decision for external echoes, instituting peer review simulations or delay rules to purge the illusion, emerging as genuinely autonomous traders who lead rather than follow. Most won't, attributing tomorrow's aligned move to coincidence. For those who audit the influence and know solo unmasking will waver when the next consensus wave hits, because the wiring embeds subtlety deeper than awareness. There are illusion-busting architectures, narrow systems from psychological dissections, with influence tracking dashboards, simulated independence tests, autonomy enforcement loops that expose and correct the trap without ongoing vigilance lapses. I state only the facade. Every day deluded by independence is another echoed error. Every day unveiled is reclamation. The fire of self-awareness can illuminate the shadows, light it, or let the unseen strings pull your strings. Your psyche favors the echo, silence it. You understand now that the crowd's effect is not an external force, but an internal betrayal where your brain's social wiring hijacks independence to align with the masses, compelling buys at euphoric highs and sells at desperate lows. But shattering this cycle demands a deliberate overhaul of instincts to transform conformity into contrarian power, allowing you to sell into the frenzy and buy into the fear as the proven route to superior returns that the herd forever misses. This liberation starts with accepting that biology favors the group for survival reasons long obsolete in markets, where standing apart feels unnatural but yields the edge, training your neural pathways to view crowd highs as sell signals overloaded with greed and lows, as buy opportunities steeped in undervalued fear, flipping the script from follower to leader in the game of wealth. Your path to mastery involves confronting the illusions head-on, dismantling the FOMO that inflates bubbles, and the fear that deflates bottoms through systems that anchor your decisions against the pull, ensuring each trade stems from isolated analysis rather than echoed sentiment, compounding not just capital but confidence as you watch the crowd cycle through the same mistakes. Historical outliers like Templeton, who bought in the Great Depression, or Druckenmiller, who shorted manias, didn't possess secret data. They possessed detachment from the social gravity, holding through the noise of 1999's dot-com peak or 2008's abyss, demonstrating that the Savannah Code can be overridden with rigorous protocol and practice. You must cultivate this solitude as your superpower, where the discomfort of going against the grain becomes the signal of correct action, rewiring the dopamine from crowd validation to personal validation through back-tested wins, turning the brain's trap into a tool that spots the herd's extremes for your exploitation. Write the final illusions that perpetuate the cycle now. The crowd's direction is often validated by momentum. My independence is already strong enough. Breaking biology requires no structure. Highs are sustainable this time. Lows are permanent dangers. Burn the list and admit out loud that you have been the crowd's unwitting accomplice, letting social wiring dictate timing that has robbed you of exponential growth, a self-reinforcing loop of suboptimal choices that has capped your potential. Some men will forge this break alone by immersing in contrarian histories, auditing lifetimes of crowd-influenced trades, implementing unbreakable rules like sentiment contrary mandates or portfolio caps during manias, incorporating daily detachment practices to mute the pull, emerging as elite traders who consistently fade the masses for alpha. Most won't, succumbing to tomorrow's consensus play without reflection. For those who feel the drag's full weight and know solo forging will bend under the next wave's intensity because the wiring embeds too profoundly for unstructured efforts, there are ultimate liberation frameworks, narrow legacy systems distilled from decades of market rebellions, with integrated bias eradication modules, live simulation battlegrounds for FOMO and fear, automated contrarian safeguards, mentorship ecosystems that enforce the independent path without the pitfalls of self-guided trials. The gate demands scars as entry. I state only the break. Every day in the cycle is another forfeited compound. Every day broken is eternal sovereignty. The primal code for crowd defiance: detect the wiring, monitor social cues, override the pull, enforce contrarian rules, dismantle illusions. Biology lies in finance. Reject proof, isolate from consensus, harness the fire, turn herd errors to your gains. The screen fades, but the market pulses. Step out of the flow, let the crowd churn, claim the edges. The fire ignites fully, feed it the masses' missteps, rise as the defier.